My guest today is Nikolai Dimitrov, founder of Unity Investment Partnership, an independent sponsor building a diversified holding company across Central and Eastern Europe. A former Champions League footballer, he's now buying resilient, essential businesses at 3 to 4 times cash flow with creative, seller-aligned structures in the markets with little competition. Thanks a lot for coming to the Holdco Builders podcast, Nikolai.
Thanks for inviting me, Mick. Looking forward to it.
Let's start with your background and life before the first acquisition, because something I already mentioned, a former Champions League footballer. So tell us a little bit what were you doing before the first acquisition?
Well, it's not a traditional road for a finance company or for a finance guy, but I was a professional soccer player, as you mentioned, for the first part of my life, like 15, 16 years. I played on international level, represented my country. I played in Europe. My last contract was in Russia. It was before the events that happened there. It was right around COVID. I already decided that football, I started to lose passion about it because football started to become much more commercially oriented, which I have nothing against, but it's just not for why I started to play the game. And I loved it with all my heart. But the moment I started to feel that the passion starts to fade away, I immediately started to orient myself what I will do after my career. Obviously, I forced the end of my career because I had 2 years more contract in Russia, but COVID basically helped me to quit my career because I was stuck in my country. And I just called my president and say, look, I'm not coming back. I have other things to do. Obviously, he didn't believe me. He said, you'll come back after 6 months. But from then on, I haven't looked backwards. And I'm doing what I'm doing now all day, every day.
Okay. So what was you knew that, I'm not going back. What other options you maybe had in the mind? Because you're still young, you're in your 30s. There's a long way to go. So what was the thought process of what exactly are you going to do next?
Well, I'm that kind of person that if I don't feel passionate about what I'm doing every day, to me, that sounds like I have to change something. And the moment I made a transfer in Russia, I was like 27, 28 years old. I knew that I had to start preparing myself for what I will do after my career. Although it looks like far, like 7, 8 years, it looked like then. But I started to read books, I started to connect with people, and I started to clean the vision of where actually I want to be oriented in business. And the acquisition space sounds a lot of fun to me, to be honest. And I also saw an area when I can use the people skills and the people qualities that I developed through sport. I can basically use them in business, like resilience, vision. Uh, you need a team basically in business, like in sport. So I saw that I can basically use these qualities in the business as well. And also, as you know, every deal is not the same, and you learn a lot of things with every new deal. And that's what excited me at that time. And everything proved correct, to be honest.
You mentioned the importance of having a team. Who did you maybe reach out first when you knew that, this acquisition space seems to be interesting? I should buy a business.
Well, when I started to talk to people in that area, I saw that they, first of all, they're not working 9 to 5. They don't have like a job. I mean, if you have a deal pending, you obviously full into the process, and maybe you can work for 15 hours for 2, 3 months. But then when the deal is done, basically you don't have a schedule, which basically excites me. And also they have that it's a really good way to provide value also to investors and to create wealth. To me, the acquisition space is the quickest road to create generational wealth. And obviously, I knew that I have to find people that have been there and done that many times. And I started to approach them one by one.
Okay, and what was the background of your today's partners, or how long was the process, or how was your pitch to them that let's do it together? And what I'm trying to maybe understand is what type of people you were looking for when it comes to strengths and weaknesses, and now yourself as well. Yes, you are a former footballer, but what about your strengths and weaknesses when it comes to buying and operating businesses?
Yeah, so first of all, I have to say that when I quit my career, I went through a couple of courses, the Wharton private equity course and a couple of financial courses because I wanted to learn the language of finance and especially on private equity because obviously I don't want to be the finance guy or the CFO of my company, but I need to know what to speak in front of people and what actually I'm looking for. So I went through these courses, then I start to approach the people. So basically, it took me like 3 4 months to gather a team. I wanted, first of all, people who are generalists, meaning that they've done a lot of deals in a lot of different sectors. Obviously, you need a finance guy. You need someone with legal background who also, all of these people, they had to have some transactional experience. I mean, not just a legal guy. He has to have some M&A experience. And I think the first team that I gathered was around 5 people with different qualities. Obviously, after that, I saw that in all of them, I have to say, were world-class people. I mean, really, really quality guys. And there was one girl. But I saw that their experience, because they were from foreign countries, was not very relevant for the country that I'm in. So I had to make changes as we go. But basically, from the beginning, I had people surrounding me that were helping me with the process.
Trying to understand the timeline, like when was it when you had the team in place and now you were like, okay, let's go and look for the deals, and what type of deals you were looking for?
Yeah, the first project I started, I wanted to do a roll up in the veterinary space. And that's something very popular in Western Europe and especially in the US. But here, I mean, it was unheard of, at least from the moment that we started to do it. So I started to approach veterinary clinics from Romania and Bulgaria, like all together, because we had a specific filter how the veterinary clinic should look like, should have 3 veterinary doctors and at least that much assistance, etc. There were like 150 clinics altogether for the two countries, and the my approach was not the best one, and we can talk about that later. But I saw very quickly that what works in the US and maybe in the UK has to be customized to work in our area, in our space here. So it was like year and a half, 2 years. We didn't manage to buy any deal because of all the cultural barriers that we have here and all the mentality and the education that the people needed. But I can say that after that, I think at least we provided some value to these people because 3 of the clinics already sold themselves to a Polish, I think, private equity company. So they already knew what the buyer would look for, and they started to restructure their businesses to be sellable, so to speak.
And you mentioned the approach to those businesses, and this is something you can discuss. Is it approach to clinics in particular, or overall those traditional businesses? Like, can you talk more about this?
Yes, it's overall those small and micro businesses. Like we are targeting businesses of up to 15 million euro of revenue. So these are small family businesses, mom and pop businesses, and most of them they don't even think that they can sell their business to someone. So most of them, their road to retirement is either give it to their kids or the business starts to decline slowly. So that was a big hurdle for us because when I talked to my partners, they said to me, do it the US way, meaning be aggressive with your approach, with the follow-ups and cold calling and cold emailing. I mean, do whatever you can. Just you have to be there for these people and show yourself often in front of them. But very quickly, I started to realize that I started to see that has a backfire effect on me, on the project, on everything. And soon, basically here in Bulgaria, the veterinarians, they created a Facebook group against me, which basically said there is one crazy ex-football Bulgarian, a Bulgarian footballer, and if wanna get in contact with you, please don't answer the phone to him. That was written in the group. So I realized that that's not the way to do it. I had to make some changes. Obviously, I learned a lot, and now I see that as a big asset of what we have here in Unity because our approach to sellers now is totally different, and their response to us is totally different. Obviously, we have some deals closed already, but if we are getting into a new sector, the approach plays a huge role still.
A quick break. This is a special one for the buyers and the backers. And CapitalPad is where they meet. CapitalPad is the SMB investment platform that connects accredited investors with acquisition entrepreneurs, so more great small businesses end up in the hands of capable operators. If you're an investor, you'll see curated opportunities with clear thesis. But if you're a searcher, you'll find capital partners who understand rate environments, governance, and the grind of the year one. Nothing here is investment advice. Make sure you do your own diligence. But if you want to learn more about CapitalPad, hit the link in the show notes, create a profile, and help power the next generation of SMB owners. That's capitalpad.com, or just take a look at the link in the show notes. Now, back to the show. And how was this period for you? You said for 12 to 18 months you've been super aggressive with the reach out, like following up, then those people creating a Facebook group for you, like, and then all those bad things happening, there is still no deal. Did you ever feel like, okay, it's not for me, or you were always like, okay, I need to iterate, I need to improve, change, and then I'll try again? What was your thought process and this period in your life, short period?
Well, it never came to my mind that I made a wrong decision to getting into that space. I just knew that I needed time to learn more how to do it, because I knew people who are doing it that are not finance people or smart lawyers or etc. So I knew that you can do private equity in the entrepreneurial way. You need to find the right deal, the right partners, and also the right approach. Nothing. I mean, and I also am thankful to that period, because if a deal happened at that time, I will miss so much education about how to communicate with people, lenders, banks, etc. So I don't feel sorry about that. To be honest, it was a good education.
The acquisitions you've made, how many have you made so far?
4.
So what is the story of the first acquisition? Maybe you can go as detailed as possible, because this was probably one of those people who was on a Facebook group as well, and eventually if they were happy to meet you, they saw that, okay, this is actually a nice guy with a great idea.
Well, no, actually, that guy, he's from a different sector, so he didn't know about the group. That group, Facebook group, was just for veterinarians, and that guy actually found through a friend of mine. He wanted to sell his business from a long time, and now, because that was our first acquisition, that was again a big learning curve for us, and we learned a lot of things from that acquisition. So financially, the deal looked fine. We bought it for 4 times cash flow. We paid 25% on signing, and the rest was seller finance. So everything looked good, but what we missed, or not missed, but underestimated, is what actually the seller thought is going to be post-acquisition and what actually it is post-acquisition. And I found out that we didn't communicate correctly and properly in many details what actually the post-acquisition process will look like. And the seller stayed with us for 3 years. He's not with us anymore, but he had to stay with us for 3 years, and he had a different idea of what the post-acquisition process will look like, and that's our mistake, because we didn't communicate it properly.
How was the first year for you and your team when it comes to day? Did you have any time to look for acquisition number 2, or you were just super busy operating this business, or how was it?
We made second acquisition in our first year, but it was from the same sector, but basically 80% of our focus was with that guy, because when we buy a business, and I know that probably you will ask me about that, but when we buy a business, the first thing we want to improve is the reporting system, because these are mom and pop businesses, and most of them, they don't have any reporting system. Everything is in the mind of the founders. So with that guy, with our first acquisition, it took us a little bit longer to implement the reporting system as we wanted to see it, and also to our accounting firm that is keeping the books for us. Also, they needed time as well to get access to his software, and he had software, but he didn't use it 100%. I mean, all of these small things, they look small, but they need so much time to change them. So I can say 80% of our first year was focused on that guy. But then that helped us with the second acquisition.
Having a founder financing like 75% of the deal, like must be a great salesperson. What was the story there? Like why he was able to do that and willing to do that?
Well, one of the other advantages that we have here as a first mover is that still there are no other buyers for that type of businesses. And being the only buyer and the seller has no other options up until now, I don't know how it will be in the future, basically gives us a huge leverage when we are negotiating either the terms, the price, the capital structure, etc. So I think I told in different podcasts that we are not very pushy on the price. Obviously, we don't want to overpay, but we are very insistent on the terms that we will receive. So if we can give the seller the price or close to his price, but with the terms that work for us and still give our minimum hurdle return to our investors, we will do it that way.
If you can share the first acquisition, okay, the reporting part is one thing, but what did you change to improve the business, and how much have you been able to grow the business? Maybe the profitability, maybe the revenue. How has it been?
Well, what we found out quickly is that these people, first of all, their marketing budgets are very low, like €1,000 per year or something like this. So very quickly you can increase revenue in that type of businesses, in that size of businesses. Second, when the reporting system is ready and you actually show him the numbers, and basically you give him you compare it with other companies in that sector, he sees that he's paying much more for the materials, for example. So he can increase his gross margin from there as well and increase the EBITDA. So until the critical time is until the reporting system is done, because then you see the numbers and you can show him the real picture. Because we know it during due diligence, but he doesn't know it because he is really involved in the machines and the operational side. But when you show him the numbers and he trusts you, then you can very quickly improve the business as well. Also, revenue per employee was something very important for us, and I have to say that we still haven't reached our targets there. But normally in the manufacturing business, like 90 or 100,000 euro per employee is the norm.
I forgot to ask before, like, what did change for yourself personally after closing the first deal? Because it's a new life for you, a new profession, and now you quote unquote become successful because you bought the business. This was your dream for 12, 18, 24 months. So how did you feel closing the first deal?
Well, I mean, I felt so proud, but the biggest thing that happened is actually we proved that this can be done at the size that we are chasing, the size of assets that we are chasing, and in our region here. Because you can imagine how many people I talked to, basically almost everyone, telling me this can happen in the US, but not here. This can happen in Austria, but not here. And I knew that it's doable. It's a matter of time. So that was one of the proudest moments I had, because basically we proved that it can be done.
So proved in a way that buying a business which is doing less than 15 million in sales, it's actually doable. You can go and buy this business.
Yes, in a country where that's not something very popular, and also a profitable business, because people here are perceiving if someone is selling his business, basically the business is in decline or there is a problem with it. But that's not how it works. I mean, we have one generation of baby boomers now that will look for retirement in the next 2 to 3 years. So they are our potential sellers, all of them.
And in the real world, how is their attitude post-acquisition when there is a new boss? A new boss is telling them to do X, Y, and Z, for example, when you see that you actually want to change or improve something, how is their attitude actually? Another quick break. If you're running a Holdco or operating a newly acquired business or just manage a portfolio of companies, you need trust, you need deal flow and talent coming to you. There is no other way around it. That's where Spacebar Studios comes in. They're a done-for-you newsletter service for different companies. Imagine a crisp monthly update that makes sellers forward your name, LPs feel informed, and customers remember you. and candidates want to work with you. No more, we should write more guilt. Spacebar turns your insights into consistent, compounding attention. If you're serious about sourcing, credibility, and community, Spacebar Studios is an unfair advantage. Check the link in the show notes, mention Holdco Builders or Private Equity Guy, and get your first additional roadmap and the first email on the house for free. Again, check the link in the show notes. And now back to the episode.
Well, it varies. So that's when I mentioned you in the beginning that I had to make some changes in my team because their experience was not very relevant for our region here. I meant exactly that because, sorry, post acquisition, you need also to play a little bit of the role of a psychologist to these people because I understand them, what shock it is for them, right? These are first generation entrepreneurs. They created an asset for 20, 30 years. And now comes a group of investors and start to telling them what to do. It's just not going to work. It's not going to work for us and for them as well. And my partners were a little bit more on some of them on the extreme side and said, if he's not doing what we tell him, just fire him and find another one. But that we were just going to lose money doing that. So that's why we are very patient, but step by step we try to implement the strategy what we said we're gonna do. And if there's some changes and something new, we always sit down with these people and explain them what we want to do and why we want to do it. And sometimes there are some tensions between us, which are totally normal. But I figured it out that if you treat people with the necessary respect and you tell them the truth, uh, someday they will see that you're basically honest and they will respect you for that.
And how has it been with the investors before we move forward with the acquisition number 3? Investors, I mean that did some former colleagues from your football field reached out to you? Because I know former athletes, myself, basketball players, volleyball players, football players, the guys who are doing very well. There's a lot of liquidity, and oftentimes they don't know what to do with it. So how was it in your case? Did people start reach out to you that could you maybe take my money as well next time you buy a business, or how was it with the investors?
That's how I imagine it will be, but that's not how it was because all my colleagues they perceive me as one of them, and nobody perceived me as someone that can be a steward of their money or grow their money. So so that's why I tried one or two times with my ex-colleagues, but I quickly realized that first of all I have to prove myself, and then maybe they will perceive me as someone different than football player. So I quickly figured out that I have to target, so to speak, different people. I mean, doctors, lawyers, real estate agents, people that don't know me, but they have some liquidity in the bank.
So now you have 2 businesses in your portfolio. How is your time split between those 2, and how did you find the third business?
Yeah. So first of all, there was a huge difference between the time commitment of the two businesses because they were in two different cities, not very far away from each other, but two different cities. The second acquisition, everything went much more smoother than with the first acquisition. As I mentioned, you 80% of our first year was basically our focus was in our first acquisition. And that showed me that basically you also have to filter very good the sellers, but we can talk about that a bit later. But the third acquisition, it came in a totally different sector, which is the dental clinic sector. And that was the mistake we did with the veterinary clinics, that we focused just on one sector and very quickly we went out of potential targets. That's why I didn't want to focus just in any particular area. We have some filters for how a deal should look like, but if it basically covers that filters, the deal, and the sector is not in a decline, we will look into the deal. It doesn't matter the sector. So the third acquisition was a dental clinic. It's in the same city as our second acquisition, and I knew from some people from the US that the dental business and the dental roll-ups are also very, very profitable. Not all of them successful, I might say, um, but as a business, from a fundamental point of view, the dental business is a good one. So we got in contact with them. Obviously, with the dental business, you need a different approach. We bought 60%. from it, not 100, because we needed. They were both owners. There were two owners, and we wanted them incentivized properly. So they kept 20% each in the company. So they have an option. They have a put option on the peak tier to sell back to us the rest of their shares. But we basically bought 60%. We control 100% of the cash flow. That's also something that we insist on. And I can say everything is going well.
Over your short career of buying and operating businesses, what have you learned about incentives so far?
Well, basically, they are the key to, if you want to create value for your investors, basically, they are the key. Because in the beginning, as you can imagine, me and my team, we were very focused on deal making. But the moment we had the third acquisition, we already saw that the asset management side of the business is even more important because that's where the value is created post acquisition.
And how many investors you have at the moment, and how much of your time you have to spend reporting to them, sharing what you're doing, how things are going, and maybe your future plans?
Around 10 investors are up until now. And I'm saying around because one or two of them are with convertible loans, but probably they will convert in the near future. But normally we promise our investors to give them a 3-month reporting. And in our last acquisition, one of the investors, the LP that we had, he insisted to receive, at least in the first 6 months, a monthly reporting because he wanted to get familiar with the business. So right now we are not a very big group of investors, so we can afford to do that. But when we started to grow bigger and have more and more investors, we have to systematize that.
You mentioned that you had on your mind and probably on the paper as well, like how a good deal or how a good business should look like. So can you share more about this based on your experience, and maybe how has it changed over time, if it has changed?
Yeah, well, look, I on one of your episodes, I don't remember exactly which one. You were talking about a holding company, and again, I cannot remember exactly which because you have a lot of episodes. But the people there, they were saying that um, in the small and micro private equity space, big difference makes how you're buying. So you have to buy properly, meaning you have to buy with lower multiples, and that's why you can give a good return because when there are no other buyers, and you're the only buyer, you can negotiate whatever multiples or whatever structure you would like. So one of the biggest keys is you have to buy it right, and then as I mentioned you in the beginning, we were very focused on deal making process, and we were focused on buying right and the right capital structure. But once we have more than three businesses, we already see that management skills and operational experience are really, really important. So we changed our approach. Our approach, we changed it after the third acquisition. And how we change it is, even if the seller is staying, we are hiring someone uh, from our side to work for Unity Partnership. And he's going to be there with the seller, learning the business. So in every moment, if the seller decides that he's not happy with the deal he has, or something comes into his mind that he want to go out from the business, obviously we have a lot of clauses in the contract that do not allow them. But if someone wants to leave, I mean, we cannot stop him. He will find a way to do it.
For people listening, I can 100% sure say with the conviction that you're living the life, you're living the good life. You seem excited, you know what you're doing. What has been the biggest lesson for yourself and the biggest maybe growth on a personal journey when doing all this compared to your previous career and profession?
Oh my God! I mean, you're asking me something that I can write a book about it, because from a personal point of view, I that's why I said I don't regret 1 second, because from personal point of view, I don't want to say grow, but I had to change so much. My daily habits, my approach to life, my approach to money, that looking backwards, even 2-3 years ago, I mean, I'm a totally different human being. And if I haven't pushed myself to be in that environment where everything is new, was new for me, I mean, I doubted that it will happen. But if I can say something, I had to gain the confidence talking in front of bankers, lawyers, auditors, all these professional people in that sector that you basically approaching on a daily basis, and you have to talk with them on a daily basis. In the beginning, I was very, how to say, closed, and I was very shy talking to them because I was perceiving myself still as a soccer player, and they were perceiving me as a soccer player. To be honest, I had meetings with bankers where I get into the meeting and he's a soccer fan, and he say, "Hey, you remember that game? You play blah blah." And with 30 minutes we speak about soccer, and I forget why I'm there. And the dynamic of the meetings was very, how to say, very different.
And one more personal question, like you've said, your approach on life and money has changed. So give us some examples.
I will, and I talk to a lot of sports people right now, a lot of athletes, mostly soccer players, and I tell them that soccer is a great thing. It teaches you a lot, but it doesn't teach you anything about financials, and it plays a very bad trick on us, on the soccer players, because from a very young age we start to make more money that we can spend, and you get used to that feeling that it doesn't matter how much you spend today, tomorrow when it's time for a salary you receive the same amount or even more, and that tricks your mind and your brain that money will always be there. But it it doesn't matter if you get injured, god forbid, or your career ends. You need to have the proper mindset to keep your financials intact and to know how to grow them. You don't need to be Warren Buffett or to have some special knowledge, but you have to know how to read financials and what a cash flow statement is and what a P&L statement is. Just very basic stuff. But that's why I'm saying that until life, until you have to bust your head in life with that. I mean, you basically don't need to learn anything. But when your life is showing you that you're making mistakes somewhere, he's the best teacher in the in the world. So now, right now, when I'm talking to soccer players and all these uh, young athletes, I'm telling them I recommend to them some books or some courses, because when you're a football player, you have a lot of free time. As you mentioned, hotel, you have 2 hours of sleep, 2 hours of training. I mean, and the rest is free time. So just do something with your brain and do something with your financial literacy, because you will be grateful to yourself 10 years after.
So now, portfolio of 4 companies. We always read about those crazy stories of private equity firms buying businesses within 3 years. They may, I don't know, triple the business, then they sell it for even higher multiple. How has it been for you, like actually growing those businesses you buy? Like, how has been the reality?
Well, we're very early on the cycle. I mean, we are 2 year and a half in the cycle from our first acquisition, but I can say that we've been through almost everything until now, especially with the first acquisition. I mean, we saw a lot of problems there, and we dealt with the problems in the business and with the seller. So we learned a lot in that business. But also, it depends a lot in which sector you're getting into. So, for example, with the dental clinic and the kindergarten, it was really they really didn't need a lot of oversight from ourselves. They just need from us to implement the proper reporting, because the people are quality people, as you can imagine. The dental doctors, they are intelligent people, and so working with them was much more different than working with the people from the other sector. I can say just a little bit easier, so to speak, to implement what we want. So they trust us more, and was much easier to implement our post acquisition strategy. But I can say that as I mentioned you, the asset management side of the business is much more difficult than the deal making. In the beginning, as you mentioned, I wanted to reach that goal of closing my first deal. That's why deal making was in my mind all the time. But now I see that to provide value for your investors, deal making is just the beginning.
And again, based on your experience, having this diversified portfolio, what are the pros, what are the cons versus just maybe focusing on one specific industry and area?
I can say it's a bit more challenging in terms of implementing the post acquisition strategy, because In the printing manufacturing, obviously the financials should look differently and the reporting should look differently because you have a lot of capex there. And on the other side, you don't need a lot of capex in the kindergarten business. So the financials and the reporting looks different there. So probably from that point of view, maybe we are a little bit slow on implementing our post-acquisition strategy. It takes us around 60 to 90 days to crystallize how the reporting system should look like, but our investors are understanding from that point of view.
Do you ever consider maybe switching to a committed capital, like putting together a fund, or you just keep doing deal by deal?
To be honest, first of all, the difference between a holdco and a fund, I think the holding company gives a lot more flexibility to us as investors. And one of the biggest selling points when I'm approaching a seller for the first time is that they're very afraid that we will buy the business and flip it after 3 years, which is almost the private equity model. And one of the selling points to us is that we're not pushed to sell. And if an asset is giving us the return that we expect, maybe we'll keep it indefinitely. So that resonates with the sellers as well. And that's why I don't like on the fund structure, because they have a limited life and they have strictly when they should invest, when they should manage, when they should exit the assets, because they have to give liquidity to their investors. So that's why I'm not a big fan of the fund. But I see now that with the increased deal flow that we have here, if we have a committed capital, we will be able to move much more quickly through the deals, because in the moment we sign the sale and purchase agreement, already we approached our investors, the people that committed to invest with us, but sometimes it takes longer until we raise the equity portion of the capital. And sometimes the sellers, they start to have seller's remorse. Maybe these people cannot raise the finance, or maybe I should ask for higher prices. So in my experience, the quicker you close the deal after the documents are signed, the better.
So if you were able to, let's say, 5 or 10x this holding company in the next, say, 5 to 7 years, because you start buying larger businesses, what do you think will break first? Is it people, processes, capital, or the culture?
We should look after the culture in the company really, really strictly. And to be honest, I have a lot of people that were telling me that me as a founder of that project, I have to be like a preacher, basically, because he said the larger you grow, the more people get involved, the more they should know what the holding company stands for, where you're going, what the vision is, etc. The more you should preach that.
Which role do you wish you'd hired earlier at the HQ level of the holding company?
Well, I will say the CEO, the CEO role, because I don't see myself being the CEO for a longer period of time. I was just in that role as an interim role because we were starting, but right now we need to hire someone that can orchestrate all these things, and that will definitely not be me.
2 quick fire questions to you. What is the best investment advice you've ever received, and what is your favorite book? I know you're busy, but maybe there is something.
In the 2023 letters to shareholders of Warren Buffett, he mentioned that he has like around 300 investment decisions by that time, and just 12 of these decisions were responsible for almost all the growth of Berkshire Hathaway, which means that just 4% of his portfolio was responsible for all the growth, or almost all the growth of Berkshire Hathaway, which relaxed me a lot, because that means that there is a room for mistakes in that business. And that was the investment advice that I received in the beginning from a private equity guy. He was a US very experienced guy. He told me that, look, in your portfolio, you will have 2-3 companies that will make all the difference. And the other ones, you just have to make sure that you don't screw them up. And that's basically how that works. So he said, don't bother yourself making mistakes, because you will do them. Just make sure that you have that 2-3 companies that really makes the difference for your investors.
So it's great to see that there is some hope for athletes. I'm saying this because I used to be a professional athlete myself. I used to play volleyball, not at such a high level like yourself, but again, it's good to see that there is some hope that you can actually go through a serious transformation on a personal level, like going from just running after a ball to now like buying businesses, managing people, and changing lives pretty much. It's great to see that.
But you know what, Mick, I want to say that In the US, that's common sense. I mean, when I talk to people there, they're really excited that, and for them, it's something normal, an athlete to go into business. And we see that we have a lot of examples, right? LeBron James, David Beckham, etc. For them, that's a common thing. But here, I really see that people underestimate uh, the personality that you have to be a professional athlete, and that can really be implemented in business and in every area of your life. Obviously, you have to learn the technicalities of the area that you're in, but the people skills that you develop in your athletic career basically can help you everywhere. So I'm really glad that you have that opinion about us athletes.
Yes, I do. Again, thanks a lot, Nikolai, for doing this. Thanks a lot for sharing your story and especially the personal part, because I think this is super valuable for someone listening. You don't need to be an athlete to just go through the transformation.
Yeah, and I appreciate a lot the invitation. Looking forward for your episodes.